It's been years since the Fed raised the interest rate, and we could be in for as many as 3 or more rate hikes this year. What this means at the very minimum, if you need to get a loan or have credit card debt, it'll be more expensive. That's why our top money move is paying off debt.
All of the Fox 6 viewers, should make it a goal in 2022 to pay down all of their credit card debt as quickly as possible, because those are the things that can escalate very quickly and cause someone's personal financial position to deteriorate.
Clay Marshall, senior advisor with the Welch Group, says it's key to assess what you owe, specifically variable debt.
I'm talking about credit card debt, which rolls over month, variable rate mortgages, particularly home equity lines of credit.
Number 2, don't shy away from stocks. Marshall suggests focusing on quality stocks with a strong balance sheet.
What do I mean by that? Looking at companies that provide goods and services that people need, not necessarily want over the course of time. The goods and services that people need, those companies that provide those, they can actually raise the prices in the face of all this inflation that we're experiencing and not see a dramatic fall off in the volume of the products that they're selling.
Number 3, when making those adjustments, play small.
There may be a little bit more volatility over the short to near term as these interest rate increases occur. I would sort of anticipate that. But again, thinking small and not making big bets one way or another in terms of all cash or all stock market, I think is very important.
Number 4, think twice before buying a house. While rates are low, home values are elevated.
If you can afford the payment and you have a longer term time horizon, if you're going to stay in a house for 5, 10, 12 years, I think you're okay to start dipping into the housing market. If you're in the home flipping game where you're purchasing homes and trying to flip them very quickly, that's a more risky proposition.
The final money move, don't assume your money will grow in a savings account.
You're still going to have a negative real rate of return as it compares to inflation. There's a lot of good people that are waking up every day trying to solve these problems. And I think when you invest in the stock market, you're making a bet on the future of America. So we're really confident about the long term.
Jennifer Horton, WBRC, Fox 6 News, on your side.